Hey, welcome. It's good to be here. I think we're all set up here. We're doing a restream, a live on restream. Yeah, here we go. Let's, hey, it's me. Here I am. I know I haven't been live on Facebook in a really long time, like a really long time. It's great to be back. I've got a bunch of stuff I'm going to cover today in the world of money. Let's turn this down now. Here we go. Yeah, there we go. Kind of like the podcast. That's the podcast music, Bloom Living Podcast. So anyhow, I've been messing around with some Restream toys, some OBS. I got a new camera, a new Sony camera that I'm operating this through. I got the mic set up. I got this beautiful new mic arm. It's all wonderful. And I thought, what a perfect time with Coinbase, with the printing of money, where Bitcoin is gone. What a perfect time for me to go live and do a video and start talking about this stuff. And so what are we talking about today? We're talking about Coinbase, the Fed, and the end of money. Yeah, I know. I said it. The end of money. What does that mean? It's the end of money as I think we know it. And the writing is on the wall. From what I can tell, from what I'm reading, from what I'm seeing, the writing is absolutely on the wall. And so with that, let's dive in. So our topics for today are the Fed, the death of money, Coinbase/crypto, and your money mindset. And we're gonna travel around this. I'm not sure we're gonna cover all those things in that exact order, but this is what we're gonna be talking about today. And so first thing I want to bring up is Ray Dalio. Like Ray Dalio, for me, is one of the smartest guys in the world, and he does such a fantastic job of explaining the history of money, where we've been. And often, the past doesn't repeat, but it often rhymes. And so based on what has happened in the past, we can kind of see where we're going. Now, what is different, in my mind, is that we're looking at things today that we've never seen before. We've absolutely never seen these things before, the amount of money that's being printed. And so Ray Dalio says this, and let's pull it up here. The dollar, euro, and yen are in the late stages of their long-term debt cycles. When the debts denominated in them are high, real interest rate compensations for holding these debt assets are low, and large amounts of new debt denominated in them are being created and monetized. All right, so those are a bunch of really nice words. Let's break that down. Basically, what he's saying is we're in the late stages of this debt cycle. We are, the central banks, the Federal Reserve, the European Central Bank, Bank of Canada, Bank of Japan, you all operating under the Bank of International Settlements out of Switzerland. They're all printing money at a massive rate. And people are wondering, like, well, why are my interest rates so low? They want interest rates low because they have a ton of debt on the balance sheet. And if interest rates are high, they're paying higher interest. The governments are going to be paying higher interests to fund all of the things that you're doing. And as I used to say in seminars way back, if I'm a politician and I'm giving you choices of, hey, here's this shiny object, everything's going to be fine, we're going to make this work, vote for me. And then you have a politician over here that's saying things like, we need to knuckle down, we're going to raise taxes, we got to eliminate debt, the economy's going to be slow, we're going to have to suffer here in order to get our balance sheet back in order. Who are people going to vote for? Right? It's a no-brainer, really, in terms of how that is going to look. And that's where we are, is that the politicians, the Federal Reserve, we're just trying to spend our way out of this. And I look at this as the biggest financial currency test we've ever done, experiment, really, we've ever done, and we don't know how it's going to go. And so I found this fascinating. This, again, is from Ray Dalio, and it's the reserve currencies versus gold. So at one point, the Amsterdam, so New Zealand or the Netherlands, they had a reserve currency. Then the sterling, British pound sterling was a reserve currency. Now it's the U.S. reserve currency. And what this chart is showing us what this chart is showing us is the history of their valuation. So 100% is their full value, right? This is like a dollar's worth a dollar in real terms. And then how these have fallen in their true cost of, or their true spending ability, right? What are they really worth in the open market in terms of what do they buy you today versus what they used to buy you? And you can see that all of them have come down to, the last report I read is that the US dollar since 1913 has lost over 98% of its value from that time. Now that is inflation. And so here's the thing, inflation, and let me just preface this right now, that inflation is not higher prices. Regardless of how they've rewritten the terminology for inflation, if you look it up now, it'll usually say it's higher prices. In my old school economic books, inflation was higher prices as a result of the devaluing of the money or the currency that you're paying with. In other words, inflation is really the inflating of the money supply, which then causes prices to go up because the cost of labor, the cost, like all of those things, they don't get cheaper, right? In real terms, and I think I read this once where they compared it to the price of a toga way back. The cost of producing a toga is still the same cost it is today, but the money that you're paying with or the currency that you're paying with has devalued to the point where it feels like the price is going up. The price of homes is going up. The stock market is going up. Is this because those prices are going up? Yeah. However, what's really driving those prices going up is the devaluing of the currency. The inflating of the money supply means that we need to have a counterbalance, and the counterbalance has now been real assets. So things like homes, precious metals, although they haven't done as much as you would think, and that might be one of the points we're going to talk about today, Bitcoin. But look at the price of Bitcoin. It is being deemed by a lot as a storage of value, and so therefore we have this currency in the world chasing it. Right? And that's what this is. This is gold, the spot price of gold against these currencies and how much the value of those currencies has declined against that spot price of gold. So that tells you right there. And this chart says everything you need to know about what is really going on and what, the floor that we're really operating under. I think that was my phone making a funny little noise. Anyhow, so here's what this is what sparked this, is that recently I read a report where the Federal Reserve came out with their minutes from March 16th to 17th. And here's what they had to say, that they were adopting an easy money policy and it was staying. So they had already adopted it, but it was here to stay. This easy money policy was absolutely here to stay. They're buying, so get this, they're buying $120 billion worth of bonds in the open market on a monthly basis. Okay, $120 billion. Why are they doing this? Because they want to keep interest rates low. So if you basically just keep chasing, keep buying every bond that comes into the marketplace, you force prices to stay and rates to stay low. Right? That's what they're really doing. So therefore, we are in this perpetual cycle of money being printed and then buying the very debt that's being put out there when the money's being printed. It's like this crazy loop of money going out and then buying itself so that we keep these rates artificially low. Now, when we came out of 2008, the financial crisis, quantitative easing. You might remember, helicopter, Ben Bernanke throwing money, like all of this stuff. We had quantitative easing 1, 2, and 3. At their peak, if my memory serves me, they were doing $80 billion a month in bond buying. $80 billion flooding out. This is just money printed out of thin air, right? We're just going to make up this money and throw it out there and buy these fixed income securities. I believe it was around 2017, 2018, the Fed actually started to reduce these assets on the balance sheet and sell them off, and then boom, COVID happens. All of that got put aside. And what had to happen was they decided that they needed to flood the market with more money. So we've gone from $80 billion being printed for, a number of years that was going on, to a brief pause, to now we're not at 80 billion, we're at 120 billion. So 150% of what we were doing before. And they basically said that they're shifting their stance on inflation. In other words, instead of them looking into the future for what inflation might be looking like, they're not going to make any changes until it's actually happening. So instead of observing forward and seeing how things are looking, they're going to wait till actual outcomes begin to show up before they change their stance, and they'll give the market plenty of notice, apparently. So when you think about your money, so if you're sitting on money, cash, and I use the term money loosely, and I'll explain that in a moment, but if you're sitting on cash, you're losing value by the second. Literally, you are losing value on sitting on that cash. And so what do we see in the world is we see that the wealthier are getting wealthier because they have extra cash to put into these assets that we have massive inflation on these assets, right? Their prices are going up. And so we're seeing real assets have inflation. They tell us that the consumer price index inflation is not happening. It's kind of, benign. It's not really that bad. And they have this target of 2%. And they leave out food and energy prices, which to me is like, well, last time I looked, in raising my family, one of my biggest costs, or one of the things I not worry, but one of the things that cost me, where most of my cash goes, is, energy, heating the home, putting gas in my car, and food prices, right? Like, how do I feed the family? But that's left out of the inflation index because it's too volatile. However, things like consumer products like televisions and such, they're coming down in value because they're getting cheaper to make. So what we're really seeing is that these asset prices are increasing dramatically because we need that counterbalance. If the money is just being printed massively, we need a counterbalance of something going up in value. And that's where we're seeing the real asset prices climb. And so Ray Dalio goes on to say that, there's really only four choices that the central banks, that these bankers have in a situation like this. So it's either printing it, it's really called printing and devaluing. So they have austerity, right? Which means they spend less. It's deflationary. It's that example I gave you of the politician saying, I'm going to be strong. We're going to fight our way out of this. We got to do all the tough stuff, right? Nobody really wants to do that. And no politician wants to try to sell that. So austerity measures are not going to, they just can't be sold to the market. So then what else can we do? Well, we could have debt defaults and restructurings. Well, that's not very good. If you've lent out your money to somebody and they don't pay you back, that has an effect across the board of a lot of people. A lot of people get hurt, companies get hurt, banks get hurt, all of that stuff. So we don't, the government doesn't want to see that happen. Well, what else could we do? Well, we could transfer from those that have to those that do not have. Now, of course, the wealthy or the people that have, they're looking at it going, look, I know I have, but it's still tough for me in some cases. They don't want to be taxed higher. So nobody's going to win that fight of, hey, let's raise taxes for the people that have and then transfer all of that to the people that have not, right? So that's option number 3. And option number 4, which is the path of least resistance, because few people understand what's really going on, is just to print and devalue, right? It's like these checks that they've handed out, just like, hey, we need to send people money. That money is just out of thin air, right? So not only have we had those things happen, which was the stimulus check. So the second stimulus check, in searching bank accounts, how long money stayed in the bank accounts, it was 11 days before those stimulus checks were spent. This last time, this third round of stimulus, they lasted 6 days. And so where does that mean the economy is going to go? And what I read a report on was that people were using their credit card in advance of that third stimulus check once it had been approved, right? So what's next? Are we going to have another stimulus package? Well, that's trillions of dollars. On top of that, and I'm referencing the US here because it is the reserve currency, right? It is what things are priced in the world. Oil, gold, commodities, etc., are priced in US dollars. It's the reserve currency. And then the president, Joe Biden, comes out and says, we're going to spend $2 trillion on an infrastructure package. That's aside from the $120 billion a month being used to buy bonds back. So if you think that we're out of this this rut of printing money, think again. We're going to be printing so much money that if you don't have other assets, if you are not putting your money in things that can appreciate against the devaluing of the currency, if you're sitting on cash, and I know cash is great, and I'm not trying to give you investment advice here. Cash is great because we need some in reserve in case things go bad. And there will be volatility and there will be ugly moments along the way here. However, the things that are going up in value are real asset prices. And so that might take us here to our next slide. So let's talk a little bit about money versus currency. And this comes out of one of my courses, Financial Foundations. So money versus currency. Let's look at this. So money traits. It's a medium of exchange. It's durable. It's portable. It's divisible, meaning you can make change for it. It's a unit of account. It has a number on it, right? So you can know exactly what it is, a $5 bill, a $10 bill. It's fungible, meaning it's interchangeable, meaning my $5 bill has the same value as your $5 bill. So we could trade them and we'd still have the same value. We would know that we still have the same value if we're dealing with the same currency and they're the same number on it. We would say, hey, here's my 5, your 5, change. We can make change for that. We feel good about that. So again, the 6 are a medium of exchange. It's durable. So it's got to be able to last. It's portable. You can carry it around really easy. Think back to if you were trying to trade, ox or chickens for things, like you just can't move around with them. Or even if you're trying to trade bars of gold, they're heavy, right? You have to be divisible, so you need to be able to make change for it. It has to be a unit of account, a number on it, and fungible, interchangeable. That's great. That's currency. That is the definition of currency. And you'll see that they've also, I don't know who they are, but they've also updated what the definition of money is. And if you look it up, you'll probably get those 6. However, what it used to say is this, and this is the point that we need to look at. True money, so not currency, so not the currency exchange that you go to trade currencies, but true money had all of those 6 things, and it was a storage of value. Well, our money, as we've seen from the gold price, the devaluing of the currency, it is not a storage of value at all. It is a loss of value. If you're sitting on cash, you're losing value sitting on cash. That's why people say you got to invest your money, you got to do something with it, have real estate or have stocks and bonds or, gold or now, cryptocurrency, have Bitcoin. This is a storage of value, right? This is why money is flowing into those things and we're seeing them inflate dramatically. So the key difference between money and currency is currency is not a store of value. Money is intended to be a store of value. I think back to like the 60s, they had silver dollars back then. Well, a silver dollar, I think the last one in Canada was 1964, maybe 1964, I think. That silver dollar was worth $1. It was worth $1 of spending power in the market. Today, to buy that silver dollar, you're looking at, I'm going to say close to $30 Canadian, at least 25 US, because the spot price of silver per ounce is about $25, and that's almost 1 ounce. So you're looking anywhere between, $25 to $30 to buy a silver dollar. And yet it used to be worth $1, right? If you spend it, it still only has $1 in the free market to spend it, but the silver that's in it has actually a valuation of higher, like 25 to 30 times the amount of what that silver dollar is. And then finally, let's talk about money mindset. So here's the thing. Why even care about any of this stuff? Why would I make this video? And it really comes down to three things: that we want to have attention, we want to have awareness, we want to have alignment. So attention, our details; awareness, what's going on around us; and our alignment. And just let me go to here as I wrap up. So details. If you want to start turning your money conversation around, pay attention. One of the greatest things I did when I didn't understand Bitcoin was I bought some. Didn't buy a lot. I think I put $200 in, but what it did is it forced me to start paying attention to it. And as I paid attention to it, I started to learn more. It was the same thing. I read The Wealthy Barber 20 plus years ago. What did I do? I opened a stock trading account and proceeded to lose a bunch of money in the stock market. But what it forced me to do was learn and understand. So when we pay attention and we start looking at the details, when we start paying attention to our bank accounts, to our credit card statements, understanding the flow of our money in and out of our personal economy, paying attention to the details, things start to shift. Now, what happens is that brings our awareness to what's going on with money in the world. It brings our awareness up. We start to see things. We start to see opportunities. We start to think in different terms around money. This is money mindset, right? And as we develop that awareness, the next logical step is alignment. Aligning our money with our values. What do we say is important to us? Now today, Coinbase, if you're not sure what it is, Coinbase went public and they did a direct listing onto the stock market. It was, suggested price was $250 a share. Last time I checked, it had peaked out at about 430 and it was back down to 253, somewhere in there. 353. So the peak out was 430. Last time I checked, it was about $353 a share. Coinbase became overnight a $100 billion company. I believe it's the 8th or 9th largest bank, if you will, for lack of a better term. It's just a trading platform, but bank in the world. And all it does is trade cryptocurrency. So when I hear people say, cryptocurrency, it's a scam, it's not going to last, that may very well be true. However, there's a lot of money that has gone into that. There's a lot of infrastructure that's been built. There's a lot of computers working. There's a lot of people, some of the smartest people in the world work in the crypto space. That tells me that there is something there. And now I've heard the whole crypto world could become the next formulation of the internet. Well, when I think back to the internet, Netscape was the first web portal where you could search things. And Netscape is gone. Google has pretty much taken over that entire space. But Netscape was the first. And Coinbase is really the first to go public here into the world of allowing people to trade freely these cryptocurrencies. And they are referred to as currencies, and they trade 24/7, right? So that's what's going on in the world. Now, Bitcoin peaked out around $64,000 last night and change. I saw it was down today. Coinbase came out, last I saw, as I said, 430 was the peak. It was somewhere around 353. I don't know where these things are going. This is not me saying, hey, buy these, don't buy these. What I'm looking to encourage you to do is start paying attention, right? Attention to the details of what's going on with your money, what's happening with your money, all of your statements, how much interest you're paying on things. Is the interest tax deductible? These are all things that you can start to bring your awareness to those details and understand them. And then as you do that, naturally your awareness around the world of currency and money and investing and all of those things will begin to up level. You will start to see things differently. And that then leads to an alignment where you're putting your money with your values. You're spending money on the things that align with who you are. You're investing in things that align with who you are. And you're actually spending at a level that is aligned with who you are. That's what the ultimate goal is here for money mindset. When you can begin to do that, you have the power, right? Here's the thing. You have the power over all of it. And you can begin to shift. And it doesn't have to be change everything overnight. It can be one little thing, just one incremental change. You could start reading blogs on money, just one a week, Saturday morning. Grab a coffee, read something about money, understand it, begin to unfold that segment of your life because it's so important. Everything we do actually involves money. And it nowhere, I'm a ministerial student. Nowhere in the Bible does it say that money is the root of all evil. What it says is the love of money is the root of all evil. The love. There's nothing the matter with having money, with having wealth, with providing for others. The more money you have, the more good you can do in the world. All right, that's it. I'm out of here. I want to thank you for your time. It's been a great pleasure to be back live again. We'll throw some tunes on to get out of this. Here we go. There we go. Yeah. Come on. Do. I know I look ridiculous, but I don't care. All right, peace out.